Facebook. Oh, there you go. I'm good now. Technical difficulty at the very beginning. Well, here I am again. Thank you so much for joining me once again for our weekly Wednesday Facebook Live session that is being streamed to Instagram. Hey, Carrie, being streamed to Instagram and also to Facebook, my private Facebook group, LinkedIn, and YouTube. If you are new in my world, my name is May Yo Silvers. I'm the owner of M2 Hospitality, a multiple six-figure profit event planning company. I'm also the founder, event mentor, and coach for events for anyone, where we help event planners to start and grow the event planning company into a multiple six-figure profit business. Okay, so today we are going to deep dive into numbers. If you're joining me on Facebook, make sure that you click on the StreamYard link at the top left or top right hand corner, depending on what device you're using, so I can see your name. If not, just type your name so I can see who is here with me instead of calling you, hey, Facebook user, or hey, LinkedIn user, or YouTube subscribers, okay? Now, today we are going to talk about understanding your business bank account transactions, especially the opening balance and the closing balance. Okay. What do I mean by that? If you have a business bank account, which you should, especially if you are a legit business owner, okay, I want to make sure that, hey, if let's say somebody is joining me on Facebook, please make sure that you post something because it seems like I may have some connection issues. And same thing, something is wrong with my internet, but it's okay. We have somebody here. I'm going to start teaching. So let me know if you can hear me or see me either on LinkedIn, YouTube, or Facebook, okay? So today we're going to talk about understanding your business transaction in your business bank account. If you have a company, okay, a legit business where you actually that you have an LLC and you also have an EIN and you're collecting money for your services, you should have a business bank account. Hey, Frida, you should have a business bank account. So when you have a business bank account, you should understand the numbers on your business bank account. And today I'm going to talk about what is the opening balance and what's the ending balance and what goes on in between the opening and the ending balance that tells a story of how healthy your business is. Okay. Basically, when you have a business bank account, you have an opening balance. An opening balance, it's always the on 1st of January, what is the amount of money you have in your business bank account. And this opening balance, if you are a brand new business and you have not created any revenue for your business yet, okay? If you have not created any revenue for your business yet, your opening balance a lot of times is what we call your working capital. Your working capital is money that you put inside your business bank account from your personal money. Okay, so basically you're using your personal funds to fund your business. So if you're a brand new business, your opening balance, if let's say 2024 is the year that you let's just say 2023 was the year that you started your business, and you have not have any paying clients prior to 2023. So 2023, you decide to go all in. You're going to have your event planning company, designing company, decorating company. You started your company, and in 2023, 1st of January, you open a business bank account. And when you open a business bank account, you got to have money in there, correct? So when you have money in there, since nobody has paid you for your services, where is the money coming from? The money is coming from your own personal account. So you're funding your business. So your opening balance is your working capital, which is the money that you put inside your business bank account. Now, at the end of 2023, 31st of December, assuming at the beginning of the year on 1st of January, you put $2,000 as your working capital. Okay, $2,000 as your working capital to fund your business. And you are thinking that $2,000 is to be used to pay for, I don't know, a course that you bought, mentorship program that you join, or to pay for your business registration fee, to pay for any software that you decide to invest for your business, to pay for some supplies for your business, etc. And then at the end of December 31st, 2023, that is your ending balance. Okay, so you have the opening balance and the ending balance. As a business owner, you need to be paying attention to these two numbers. At the end of the year, okay, December 31st, you want to look at your ending balance. If you have an ending balance of $10,000, okay, so remember, at the very beginning of the year, you had $2,000, and then at the end of the year, you have $10,000. That does not mean you make a profit of $10,000. Please be very mindful of that, okay? Please, that doesn't mean that you have a profit of $10,000. That means you actually have a profit of $8,000, because out of that $10,000 on your closing balance, $2,000 is your working capital. That means that is your own money that is not considered as profit. And this is also taking into consideration that any transaction that you had done for your business that is considered expense for your business has been taken into consideration or taken out from your business bank account. So if you have a debit card or you're paying somebody during the course of doing business from January 1st to December 31st, you bought supplies or you bought a software, and you're paying these vendors or items that you invest for your company, you're paying it through your business bank account. So at the end of the year, the ending balance has already taken into consideration all those costs that you had invested or spent from the January 1st to December 31st, and then you see an ending balance of $10,000. Your profit for the business is $8,000, because you have to minus the working capital, which is how much money you put in at the very beginning of the year. Okay, assuming you are a brand new business when you started your business on 1st of January and you haven't had anyone pay you for your services. So that is $8,000 of profit. Okay, now if you had put in money during the year because your working capital was not enough to cover your business expense, your working capital at $2,000 that you put in on January 1st was not enough to pay your business expense throughout the year. Perhaps you were spending more money than you're actually making. Okay, and that's very common when you are brand new in the business. You put in another $3,000. So now you have invested $5,000 in your business in terms of working capital. So at the end of the year, if you have a ending balance of $10,000, your profit is no longer $8,000. Your profit is actually $5,000, because you have to remember you pump in another $3,000 as working capital. I know that this sounds really elementary, plus minus, right? What is going in and what is going out. It sounds really elementary, but why am I still teaching something that is so basic? This is because I've spoken to many small business owners. When I ask them, okay, even people who have been working with me inside our mentorship program, they are so good in their craft. They are getting better at sales and marketing, but the business finance, they still have work to do. And people who come on our free business consult call and they say that they have a business, and I ask them, okay, how much money did you make for 2023? They couldn't give me a solid number. That's the problem. That's why I'm taking the time to teach something as elementary as this. you can't get this right, you don't have a business. You have a hobby. Okay. So when I asked them, oh, how much money did you make? And they gave me $10,000. I said, oh, that's fantastic. I said, what was your opening balance at the beginning of the year? And then they were like, what are you talking about? Well, I said, you need to go back to look at your bank statement. What is your opening balance and what's your ending balance? And then ask yourself, how much money did you put in at the beginning of the year? And did you put in any money during the course of the year to pay off any investments or expense for the business? And then look at your ending balance. You've got to take into consideration how much money that you put in as working capital. That's what happened to me when I started Events for Anyone, my coaching business. When I started that company in 2020, we didn't have any paying clients. Therefore, I put in money to fund the business. And at the end of the year, okay, 2020 beginning of, I started business in June 2020. No, actually in May 2020. At the end of the year, I look at how much money I made. I have to take into consideration how much money I pump in. And every time when I see that I have made a profit in the business, at the end of the year, I have to pay myself back. I have to reimburse myself for the working capital I pump in. Okay. So here, everybody is clear about this, right? Make sure, give me a thumbs up, an emoji, or yes. So you're following me with these numbers. This part is extremely important. Then we got to understand the numbers in between. Okay. The numbers in between. So when you are looking at your bank account, there are things that is like debit and credit, right? Debit and credit, debit and credit. So when you're doing your taxes at the end of the year, if you're using your QuickBooks, okay, if you're not using QuickBooks, then like me, interestingly enough, all right, and I say that all the time to the people who has been following me. When I started with M2 Hospitality, I didn't have QuickBooks. I logged everything into an Excel sheet. So I will look at my bank account statement every single month, and I look at how much debit and how much credit I have. So credit is money coming in and debit is money going out. So I will start looking at how much expense did I incur every single month and how much money did I get every single month. So all these numbers must tally to equate to your ending balance. If they don't equate to that number, the ending balance, something is very wrong. Okay, that's why QuickBooks is good, or having a software that is able to categorize or help you compute your monthly expenses is great. But if you really want to be super hands-on, you can just download your bank account statement transaction every single month and start looking at how many debits and how many credits that you have. You have to understand at the end of the year, okay, at the end of the year, this is what I do. And it has helped me tremendously in my business to understand what am I spending my money on and where are all this revenue coming from. So at the end of the year, I always look at the beginning balance for the year and also the ending balance of the year and what happens in between, the transaction that happens in between that give me the ending balance. So when I say the numbers in between, I'm looking at what money am I spending, how much am I spending on what, and what revenue is coming in and from where. So I'm going to repeat, what am I spending my money on and where is the money coming from? The revenue, where are they coming from? And based on this, it gives me a clear idea what I need to do next year. Okay? What I need to do next year, such as what is the opening balance I will have for 2020, for the following year, 2024? Do I need to pump in more working capital, or whatever amount that I have left at the ending of 2023 is enough to carry over to 2024? And at the same time, I'm able to pay myself a little profit or owner's distribution and have enough money to pay off the operating expenses for the business for 2024, the following year. Okay? This is a lot of financial terminologies. this session is a very boring, non-sexy topic, but it's a conversation that needs to be had. This is how business make a lot of money, or business that lose a lot of money when they are not able to interpret and understand and make decisions based on what the numbers are telling you, the health of your business. Okay? There are people who keep spending and spending and spending when they see the money coming in, because they feel that the money is coming in, there's always going to be enough money in the bank, in the business bank account, to pay off the operational bills, and they keep spending. And then it comes to a point they realize that, oh my God, actually, I don't have as much money that I think I have. And this is a very scary situation. Okay. So at the end of the year, I start looking at how much money I've spent and on what. So I start looking at all my debit transaction. Okay. We're talking about the transactions that happen in between from the beginning of the year at the end of the year. So I've seen quite a few eyeballs on Facebook. Make sure that you say hi so I know you're here with me. So you want to be able to look at all the debit transaction. What are the debit transactions? What am I spending money on? A lot of times, a business, a legit business or a running business, okay, not just a name that you have registered, but you're actually doing transaction, is you want, hey, Reina, you want to be able to look at what are you investing your money on. So and a lot of times it's under these three categories: tech/software, labor, okay, on labor, on tech, and also on marketing. So I start looking at all the debit transaction. Okay, what exactly am I spending on? How much money am I spending on tech? How much money am I spending on marketing? How much money am I spending on labor? And I start looking at these costs, this expense, because these are expenses for my business, all right, or investment for my business. I start looking at the debit, and then I start looking at the credit. Okay, how much money am I making every month? By the end of the year, I will know how much credit I have. The ideal world is your credit has to be more than your debit. Therefore, you have a profit that is assuming that you did not pump in more money during the year to your business. Okay, do not confuse your ending balance to be 100% profit, because if you pump in money during the year as a working capital, and the amount of money that you pump in, all right, is more than your ending balance, then that's a problem. Okay, that means you have a loss. So you want to look at your amount of credits versus the amount of debit. And in the ideal world, it will be a lot more than your debit. So now you're going to start looking at, okay, I made all this money every single month. You have to understand, okay, I plan all these events and I make all this money every single month, the type of events that I plan. Then the next question you're going to ask yourself is, where did these leads come from? Okay, so let's talk about the credit first, then we'll talk about the debit. You're going to ask yourself, where did these leads come from? Right? Every single month, you are making money, you're collecting money from your events. Then you have to ask yourself, where did these leads come from? And then you're going to have to draw, I don't know how you want to do it, but I normally have a spreadsheet that I have different buckets, okay? And the buckets are, what revenue is this? Is it a rooms commission revenue? Is it an event planning fee revenue? Is it a referral fee revenue? Is it a rental fee revenue? So I will put it into different buckets. And then I will see, oh, okay, this particular bucket is making a lot more money than the other bucket. Or I can see that, oh, okay, I have money in all this bucket. Now I go deep dive into where did I get the lead to make this money in these buckets. So I go trace back into where the lead come from. And with that taken into consideration, then now I have an idea which marketing avenue I need to invest money in. Okay. So if I have, like, for instance, I see that, oh, a lot of my bucket for event planning fee has a lot of credit in there. That means I'm collecting a lot of money for my event planning fees versus let's say rooms commission, okay, or versus versus referral, okay, referral fee, then I will have to look at, okay, I have a lot of people paying me for my event planning services. Then I'm going to start looking every single month, where did this lead come from that I made the money for my planning services? Did this lead come from a referral? Did this lead come from Facebook ads, Google ads, or through my SEO? Did this lead come from my social media through organic marketing? Did this lead come from a referral from a vendor or a venue? Then I start putting a number one, like drawing sticks. The one that has the most sticks, the avenue where the lead is coming from, that has the most sticks will be the most profitable, okay? The most profitable avenue that is giving me all this money. So in this case, I realized that, wow, okay, M2 Hospitality is getting paid a lot of, but revenue bucket that is huge is my event planning fee. Then where are all these leads coming from? And then I come to the conclusion that this one is coming from referral. Okay, I have a lot of people referring me leads. So I have to start looking who is referring me the leads. Now, once I narrow that down, is there a particular organization that's referring me a lot of leads? It could be a vendor, it could be a venue, it could be a person. That's when in 2024, I am going to focus my energy to fatten up this particular bucket, okay, this marketing avenue. That means I will be spending more money in this on this person who's giving me a lot of leads, or this venue that's giving me a lot of leads, or this particular organization that's giving me a lot of leads. I'm going to be doing a lot more FaceTime so they can continue to refer me leads, okay? And then I'm going to look at, let's say, okay, if I realize that, oh, I'm only getting a small percentage of my event planning fee from Facebook ads. And then I'm going to start looking at my debit, okay? How much money have I spent on Facebook ads to give me this amount of revenue? Then I realized that, you know what? How much I spent on Facebook ads, that number, the debit number, is way more than the credit number of the revenue that I'm getting from Facebook ads. So what would I do for 2024? That means I will abandon, okay, or spend less on Facebook ads, because I am not able to justify to myself that I should be spending more money on Facebook ads when the amount of revenue that I'm getting from Facebook ads is not producing a positive outcome compared to the amount of money that I'm spending on Facebook ads. This is what I meant, the in-between, okay? Of course, there's other factors taken into consideration, such as, am I able to close those leads? So, but I have already taken that out from the equation, because my sales skills is going to be the same across all platforms. So I know I can sell, right? And also the things that will be a variance would be the quality of the leads coming from Facebook ads. So it could be the quality of the leads is not good. Therefore, no matter how well I sell, I'm not able to convert. So why would I want to continue to spend the money? If I'm looking at the in-between transaction, that I'm spending so much more money on Facebook ads, but the revenue that I'm getting back is not able to justify the amount of money going out. So this is what I meant by the in-between number. So you have to look at the opening balance and the ending balance. And the ending balance does not mean your profit. You have to look at whether you have pumped in any money in between as your working capital. Then you need to look at all your debit transaction and all your credit transaction. And you have to go trace back your credit transaction, that means money coming in. Where's the money coming in from? Where is the revenue bucket? Then you have to deep dive one more step, which is who is giving me these leads so that I can make this revenue. For the debit transaction, you have to look at where am I spending the money? Platform, labor, or marketing. If you're spending it on platform, then you have to go evaluate the effectiveness of the platform? Has it helped you to become more efficient throughout the year? Or has it helped you to become more professional in managing your client project management? So what is the return on investment for investing in that platform? Is there a more effective platform out there? So you want to look at the return on investment on this debit transaction for your platform that you have been investing every single month, okay, that you're paying. At the end of the year, you have to ask yourself this question: am I being more efficient? Has it helped my client to have a better, smoother workflow? And what other return on investment did I get from this platform? If you're not getting anything from this platform and you're not using this platform, why you continue to pay it? So in 2024, you're going to take out this transaction. You are not going to budget money for that. Okay, so you have just reduced your cost for next year because you're no longer going to use that, or you found a more cost-effective platform because you realize that the platform that you invest this year is too robust. You don't need that. So next year you can downgrade the plan. Okay. So when you're doing your opening balance for the following year, you have to take into consideration: do I need to pump in more money, or do I need that much working capital? Okay. What am I keeping in terms of, like, what investment am I keeping? And also, what avenue, marketing avenue or tech or labor should I be investing? Because looking at the transaction this year, how much I paid them, they got me so much more return on my investment. Therefore, you want to pump in more money. Therefore, your opening balance could be more than what you had last year, because it's worth it to invest in those avenues. Okay? Heavy financial talk over here. But that is how I had transformed my business. I look at my business transaction. I don't wait until the end of the year, by the way. Okay. I know my numbers at the beginning of the year and I know my numbers at the end of the year. And then every single month, I look at my transactions going out. Like, do I need to continue to pay this subscription every single month? Do I need to pump in more money in terms of marketing because it has been giving me good leads and I've been able to book more business? Or should I take away this marketing funds for this avenue and reinvest into something else? So every single month, the business is telling me a story, but you got to understand how to read your numbers in order to interpret what is the story that they're telling you. So don't be negligent when it comes to that. Okay, when it comes to that, don't wait until the end of the year to find out whether you're making money or not. Or did you make a dumb investment? Or I should have invested more halfway through the year, then I would have made more money. Okay, all right. So I hope you're able to follow through whatever I'm saying today. And if you do, again, give me a thumbs up and emoji. Probably this is a session that you have to watch a few times to understand it. All right, that's about it for today. Very boring topic, but definitely a conversation that needs to be had. So you know how to read the story that your bank account statement is giving to you. All right. Thank you, everybody, for your time today. Now go back and look at your bank account statement every single month and start doing your CEO work of understanding your transactions every single month. Have a good rest of your Wednesday. Bye, everybody.